I want to talk about something that gets confused a lot with home buyers and home sellers. You will hear someone say that they're pre-qualified, or you will hear someone say that they're pre-approved. And I want to make sure you understand what the difference is so that if you do go to sell your home, and we would explain it to you if you sold it with us, but if you do go to sell your home and you get offers from people and you see either a pre-qualification or a pre-approval from a lender, and a lot of times they're used interchangeably, but they're not really the same. So getting pre-qualified is more of an informal step, okay? The prospective buyers give the lenders a sense of their overall financial situation. The buyers will provide their income, they'll have a soft credit check, and the lender reviews everything and gives borrower a general idea of how much they'll be approved for. There's typically a process where people that will get pre-qualified won't actually be able to get pre-approved or approved, simply because the pre-qualification requires the buyer giving the lender information that is accurate. And one thing I've learned through a few $1 billion in home sales is there are a lot of Americans that do not quite understand their financial situation. They don't understand their income or how they're paid, and they don't understand their credit. So they will explain things to a lender that aren't actually accurate. So a pre-qualification certainly does show you the likely possibility that a consumer can get a mortgage, but it isn't as solid as a pre-approval. So a pre-qualification, again, it's more of a loose check on things. And when money was flowing back a few years ago and interest rates were in the 2s, the 3s, and even the 4s, if someone was pre-qualified, they were probably going to be able to get approved. But as rates have risen and the economy has softened and there's been more issues with people's jobs, there's more fall through between people that can get pre-qualified and when they can get pre-approval, when they have to pay a 5 or 6% mortgage instead of a 2 or 3. So what is pre-approval? Pre-approval is more of a formal way for lenders to gauge your financial situation. Now, I also want to say a pre-approval also does not mean a guarantee to close. It's why it's called a pre-approval and not an approval. People can lose jobs. They can make financial mistakes during the process of owning the home. They can get credit they shouldn't have gotten. They can miss payments. So a pre-approval isn't a lock. It requires the buyers to do certain things and of course stay employed. So a pre-approval isn't a guarantee, but it is a stronger certification of the buyer's ability to buy. So a pre-approval is as close as you can get to confirming your credit worthiness without having a purchase contract in place. It's a formal way for lenders to gauge your financial situation. You fill out a mortgage app, you provide documented proof of your finance, like bank statements, pay stubs, tax returns, and the lenders do run a credit check. When you're pre-approved, you get a maximum loan amount the lender thinks you can take on, and it's offered to loan you that amount, but not a firm commitment. Most approvals last a max of 90 days. The firm commitment comes with the property and the confirmation of all the, again, same thing, information you've provided. For example, confirmation of your employment still existing. You could have provided a pay stub from last week, and this week you got fired. Guess what? You're not going to keep your approval. So a pre-approval is definitely a better certification of the buyer's ability to buy. So if you're a home seller and you're selling and you get someone that has a pre-qual, you can certainly ask for them to provide a pre-approval to ensure that the lender has actually looked at all of their information. Because again, buyers sometimes don't understand their financial situation, or they lie, or they're confused, or they don't realize their income that they explained to the lender of $200,000 is only about $70,000 because of all their write-offs, or because they're self-employed, or they're in a new job and their income doesn't count until they've been in it for a period of time. So there are a lot of reasons why a pre-approval, is certainly, certainly better. So if you're a seller, if you're a buyer, my strong recommendation to you is to get pre-approved. The reason why I recommend getting pre-approved is because then your offer is stronger, especially in today's market where you're going up against a lot of cash, a lot of hedge funds, a lot of institutional investors, and you want to make the case to the seller that you have the ability to buy. If you are self-employed, Another really strong reason to get a pre-approval, because if you're self-employed and you write off a lot, your income is going to get whittled down based on your tax returns. And even though you might write off a lot of things creatively and you might have enough money to pay the mortgage, you may not be able to get through the process. So strong recommendation to buyers is pre-approval, and certainly sellers should know the difference between pre-qualification and pre-approval when they're reviewing offers for their homes.